So again, 4 weeks ago, welcome everybody who's watching this video and just joining. 4 weeks ago today, I had given my trigger point for SPY puts at the loss of 512. And at that level, which is this line right here, I had said we would pull back to 495 to 500, which is right about this box right here. All right, that's where I expected an ultimate target to be. So obviously we bounced in that area. We're pushing back up. What comes next, Amy? That's what we got a lot of people asking, and I will tell you what comes next, at least in a algorithmic fibs type way. All right. So next, first of all, how did I get those levels? I could tell you to go watch the video, but I'll show you really quick. So if we put on the weekly time frame, the first thing we used was a fib extension. And the only time I really use the fibs extension is when we have clear skies. When we're at a level where we have nothing above us, how can we possibly know what to expect next because there's nothing there? So for this fibs, when you use an extension, a fibs extension, you really want to get into what is like the actual zone? What's my primary purpose? Am I trying to establish levels for today? For the next year? What is the most recent trend we're in? And for me, when I'm using the fib extension in this way, I justify starting at COVID lows because that was really the start of this market. Because before that, we had pulled back like 35% in a month. So that pullback wiped out and cleared all algos from this previous low. So that's my start. So with an extension, it's a three-legged approach. You're going to start at a relative low, and then you're going to a relative high. So I went to previous all-time high in 2022, January, and then you're going to go to the relative low again, which is right here, right around 340 from, I think it was, if I'm not mistaken, October of 2022. So that's what we got. That's our extensions. I'm going to make these pretty because it could really vary a lot. I kind of want to make these points exact. So what is this point here? Bear with me. The low was 205.51. I want them to be exact. So this low was low 340.27. Pretty close. And then our high was 524.61. All right. Wait, what am I doing? This high. I'm an idiot. Sorry, guys. 463.80. All right. And these levels matter when it's like 3 like that because it could really throw the algorithmics off or the areas off. Now, second, anytime you're using fibs or just in general, click this little button. You want to be on a logarithmic scale. Okay? That makes the scale equal throughout, which your fibs are going to be thrown off if you're not on that type of scale. Just point blank. So what we have here is extension levels, the next levels we would expect to hit. So our 0.5 retracement is our high, from our low to our high to our low. All right. And as you can see here, I'm going to get rid of this thick pink line here. Not needed. There we go. As you can see, this level, our 0.705, which everybody loves, the golden pocket. So the extension golden pocket everybody talks about is right here. What are we sitting in? What are we floating in? Let me turn this color gold here. All right, this is our golden pocket that, Brett Simda and Doge and everybody likes to use that 705 on it, which I use on my extension. And look where we're floating. And look where we bounced at that. The 618 of our extension is 498.04. And you cannot, and here's the thing, guys, you cannot expect it to be exact. You got to give it at least 8 points on either end. 8 points is only 2%. You can't expect it to bounce exactly at 495.53. 498.04 when it came down to, what was this? 494, 493.86. That's perfect. That's within 1% on a scale of 4 years of data, okay? And look where we bounced. Right off it, and now we're touching that top again. So that was line number 1, the 618. I'm going to turn this. I don't know why it's pink. This needs to be orange. All right, so let me delete this. So we can see where these two lines come in. We had this line I previously had and this one. It's a little off, but here's our 0.5, which we know is incredibly important, a 55% retracement, which is also this previous high right here. All right, so that's what we're looking at next. And that was 467.92. So we came down to our 618, and our next level is our 467.92. So that's this line here. Let's make that thick, and we'll make it dotted so we know it's part of the extension. We'll make the extension dotted. And here's our 618 from the extension. We'll dot that as well so we know it's part of the extension, not the retrace. Okay? I'm going to get rid of this box so we can see, and I'm going to get rid of this fib. So we know what we got. We've got our 618 extension line. We hit hit resistance at the 705. And here's our 50% retrace line. All right, so that's our first set of data we used. Second set is just a fibs retracement from our current breakout. We're in a breakout. We have a current breakout. You cannot eat plastic, little girl. Here, take this. So in the breakout we're in right now, we would want to measure from October low to current high. Right? So we want October low to current high. So that's what we're going to do. Sorry, I had to hand my dog a treat. So let's go from that low to this high. That's our second set of data that we're compiling on this. Okay? So on this data, it's a little off now. We've got purple line 25% retracement. All right, which is right here. And then we've got our 0.5. See, this is a little off. What's going on here? Am I too low? So we've got our 0.5 retrace, which is right here, right? And our 0.618 is right here. That's what we want. I don't care about the 705 right now. We care about these three. I'll make them a little thicker. So remember, our dotted lines, our extension lines, when we go from our low from COVID to our previous all-time high, January 2022, to our 340 low from October 2022. So that was the extension. And then our retrace, it's a simple retrace of our bull breakout we're at now. So when I wrote my thesis, I said, okay, if we lose that 512, I expect us to come between 500 and 495. Why? Because that's the zone of, and let me make this lighter, not orange. That's our zone of both our 618 retrace on the extension and our 25% retrace on our Fibonacci retracement. Perfect. And look where it bounced. Effing perfect. Perfect. Okay, so what's next? What's next? If we lose this level, we've got three lines almost on top of each other from 462 to 468, which in relative terms, they're all exactly the same range. They're all within 6 point sets, within 1.5%. So this is an incredibly major area because we have three things all coming together here. We've got previous all-time high here. We've got our fibs retracement, 50% retracement from our extension 50%, and our fibs retracement 50%, all three. The two 50% and previous all-time high are within 6 points of each other. And if we turn this on, our EMAs, let's put that daily on. Let's see where the 200 on the daily is. Ho, 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 ho. Look at that. It's creeping over it now. But it was right there as we started to pull back. It was right there. And that's why a lot of people we're kind of calling for that come down and test that 200, because that 200 was layered on top of those three major areas. That's big time. But we didn't. And why didn't we? Because we had more data we compiled. We knew our 25% retracement lines like a nice warm blanket for the newborn baby. And, you know, it bounced right off and just picked it up and hugged it and said, no, you're going to go back up. And then we had our 618 retracement of our extension. We broke through that. So what are we looking for next? What's next? You know, first of all, we came a breath. I mean, a breath from this 21 cross and the 50 bearish. Okay? See those two? It's good now. We picked it up. That's my trigger point, man. If we get these starting to curl down, they were starting to curl down here. All right? But we were on top of these two levels, and they didn't cross. So right here, this day, you can see how, holy cow, this was like doomsday right here. We had to bounce there. And you could see it's an inverted hammer too. The world, everybody's calling for destruction of the world and the market this day. Okay? It didn't happen though. If we would have lost this 492 or our 25% retrace, this previous low, and had this bearish cross, this was target. All right? Like, it was coming down there. Everything would have stacked on top of each other for that to happen. But it didn't. We picked up that support. So we called all this ahead of time. This was all posted before it happened, guys. This isn't me after the fact telling you guys like what we could have done. This is me literally showing you guys exactly what I told you about 4 weeks ago. Okay? I wrote this on 4 weeks ago today, which is this day right here. This day, I posted this video. And we didn't cross that 512 till this day. So there's no such thing as, oh, I bought the puts and we went back up. Nope. Once we crossed it, we flushed the toilet. All right. So what are we looking for next? And this is simple stuff. This is just two things stacked on top of each other with EMAs. That's it. So I don't need my EMAs anymore. First thing I would want to look at is the previous sell-off, the recent sell-off, which is what I was kind of looking at today, and I think is very, very important. All right. So if we put a fibs for our sell-off here, is the first thing we're looking at. You could see what we did yesterday. As we got, I mean, when I talk about these levels are algorithmic and where the computers trigger buys and sells, I mean it. Because look what happened. I've got the 705 on for all you 705 lovers, but I don't necessarily use it. Our 618 right here, we had a little bit of trouble breaking through it right here. We hit it like to the penny, guys. Look at this, to the penny. On this day, we hit the 618 of our sell-off from our high to our low. And then the next day, as we broke up and gapped it, ripped. We absolutely ripped. Now we're above the 705. But, we need to stay here. This is we're talking about 4 years of data with the levels I'm using. So a daily chart isn't enough. So what I'm looking at now is the weekly close. And we might not get it. We might rip this week to that high and not get the trade, and that's okay. This level. All right? This is the level that if we fall into this level by the end of the week, or we open Monday within this box right here, as we lose the box, so as we lose, let's say, we'll give it 507. As we lose 507, we got a straight ticket down again. Okay? That's what I'm looking at. If we open next week, we're already there, but we need to stay there. We need to close the week up here. But as of right now, it's looking like inevitable that we come and test those all-time highs again. All right? And there's so much other things I could do. I look for the order blocks. I could do all sorts of stuff. And yes, I'm just going off fibs because the reason I use the fibs and the standard deviation for this, guys, is literally because that's how the computers trade. And that's the majority, the bulk of what's going to trigger the market up or down. So, in closing, end of week, or open of next week, sub 507, we will come back down to 500 level. Then we're on our retest. Because remember, we always have to retest stuff. Just because we took a bounce doesn't mean we're in a bull market, all is good, kumbaya, let's buy calls. No. That was our first test. If we go back to our daily, which we're at, this was our first test. We need a retest, boys and girls, babes in Toyland. I feel like we need a retest for a true decision. So that's really what I'm looking for. And that's a major level we're looking for. Until we wipe out these highs, that's the fibs I'm using to determine the next step. So if we close this week, open next week, or if it's a week after, below 507, puts down to 500, and then we know what to do from there. The loss of our wick low to 492 area, so let's say 490, all right? So let's give our bearish swing. I'm not talking just bearish. I'm talking like bearish swing level. Entry is going to be 490. Oh, shit. I got to go close my door. It's raining. I've got it open for the dogs. I'll be right back, and we'll finish this, guys. I got to go close. Oh, my gosh. There. I'll be right back, guys. 10 seconds. Sorry. Coming back. Okay, so anyway, at that point, that's what we're looking at. The short term, so like a short term put entry from the 507 down to the 500 to 495. Then our bearish swing entry comes at the second loss of this level. And we're coming down. At that point, high end 470, low end 462. So this is our target range. We already went over Y of the next actual put swing, like substantial put swing level. There's our target zone. Does anyone have any questions about this before I go on? No, I don't think so. Okay, so on the upside, though, one thing I forgot to do when we had the weekly on, what's our extension level? What's our next extension? So let me get my extension up. So at this point, we're looking at there we go. Oh, it should be a little higher. There we go. So we're looking at 541.67. That's our, oh my gosh. So we're looking at 540. We're going to say 535 to be safe because that line's not perfect. So our next target range on the extension, if we break and hold on the weekly, if a weekly close and subsequent week open, because we need that next week open, is higher than our high now, we're looking at target range of 537 to 543 is our next target range. Actually, no, 537 to 547. Sorry. 5 points on each side. So that would be the swing put target range on the bull side. And that's just our next extension up, 786. I do leave those on when it comes to extensions. So that is, in a purely algorithmic way, is my targets on each side. I do believe we need to retest that low range again. Oop. And at that point, we'll have some real conclusive data at that point. So 507, I'm even going to say like 506.50 to 507 loss. I would look for a 500 and then a 495 target area for a short swing. Okay. And then for longs, we know we need to hold above that 515 on the week. And that's it. So that's what we're looking at. And at this point, as far as playing along, it's more in day trading levels for me right now, because the entry was missed. We already went over that. If we put that fibs, and I'll just remind you guys, a fibs from the high to the low of our last sell-off, and yesterday was the day for the swing. Because remember, what did we say? Let's go back to it. And I didn't draw perfect. 2 days ago, we had rejection exactly. This needs to go higher. There we go. We had rejection exactly at the 618, which is right here. And the next day, gapped up over it. And now is our first day over our 705. Doge, if you're listening, I got it on there just for you. Today was our first candle open at that level. So long side, if we hold and close the week above 515 and open next week above 515, then bullish entry up to all-time high test, and then extended targets long term are 537, 543, 547. Short side, if we close the week and hold and open below 506.50, we're coming down to 500, 495, and then at that point, the weekly close below 490, we're coming down to the 470 level. Yeah. It's on there for you. Well, a lot of people use it, so I just put it on because I know a lot of people do give a shit about it. So, you're welcome. And thank you. That's all I got as far as the SPY levels. I will not stop this recording until someone, if someone has a question, please ask now. A lot of you stuck around and listened. Cheers. And that's how I get a lot of my theory levels. My thesis levels. And of course, then we add on whatever else in it, because like we could see this 705 comes right in at the tip of these candles here. We could see as we blew the top off this yesterday, we ripped. We got the volume coming in and everything else. Thank you guys all for listening, and yeah, because I can't make a gains video for today because I didn't have no damn gains.